We have some exciting developments in the crypto market. Everything is nuking, everything is going crazy. How I position myself, how I manage all of my plays, why I'm long ETH, why I'm long ADA, and why you shouldn't try to over-refine those higher time frame key levels. All of that in today's episode. Let's go. So as usual, start with BTC. It's a liquidity report, so we're gonna talk about stocks as well. But let's start with BTC here because we have some very interesting developments in crypto right now. As you know, I wanted to long this level. I got stopped here, which is okay because I'm still on this huge short, and I also built a local short here simply because I don't think this bounce is going to be sustainable, especially looking at what Donald Trump is posting and the White House about the bull market and everything. So I'm still waiting for some kind of fear catalyst, real world catalyst to go really big on those longs. But it's definitely very wise to gain some exposure from here and to not try to over perfect it and think you need to wait for all stars to align. You have enough stars in one line already, so pull the trigger, be brave, manage your risk, and you will be fine. So what's my plan for BTC? First of all, I TP'd 30% on the short, and right now I'm not interested in taking another long. We might need to look at lower time frames here on the daily. We closed below this level. We also closed below those two key levels, and this is technically our bull market invalidation. So higher time frame structure broke to the downside. Very important is going to be what the weekly will say, because we have now this big absorption wick here. We have this as our structural low, but I marked this as well. So this is a key area for me. And if we close within that, it's technically not fully broken, but we have like broken structure here, but not really like confirmed it, at least as I see it. So what all of this means, we have the 0.5 here, which is our line in the sand. We talked about this premium and discount. Check out the video if you do not know what that is. And a close below the 0.5 makes way further downside or way bigger downside much more likely. Right now we sit exactly at the 0.5, so we are at equilibrium. So buyers and sellers, premium and discount is balanced right now. That said, the 0.5 is usually a very reactive area, as we see right now. And I say it's important to wait for this weekly close, and not just for this weekly close, but also to see the developments and how people react to this weekly close, because it's not just about this candle closing on Saturday at 12 p.m. because it's basically a 1-minute close, right? It's about how and why and how do people react. This is the most important thing. And on this day, you've seen a lot of people getting very bearish, very desperate. And now we see this big counter trend bounce. And I talked about this before. This is very common. I mean, we had a look at this daily candle. This is not happening every day. So we have a 40% drop on BTC, and it was very likely that we are going to retrace a good chunk of this move very quick. Why? Because people capitulate on such days, and then the bounce attracts them to buy back. And this is simply how accumulation works. This is simply how they drain even more money, not just like on the way down when people get wrecked, but also on this bounce on the way back up, because people FOMO in, people get impatient, people chase those moves. And if you didn't buy, and if you even sold down here and it bounces like 20%, you will ask yourself, what the fuck did I do? And many people are going to chase this for that reason. So that's also a reason why I'm in this scalp short. I'm usually not a scalper, but there's so much volatility right now, and I got some time because there's a bad weather window, and so I'm taking this trade to reallocate those potential profits once we go further down. And I'm more interested right now in ETH, for example. I will show you why in a minute. But as said, on those very highly volatile days, scalping makes actually sense because, first of all, it easily covers the fees. Those higher time frame moves, they don't target scalpers. So you're not in this like 1-2% range, which is draining liquidity from all those people who stare at the charts all day long. Those big moves, they are targeting higher time frame traders and investors. And so it's, I don't want to say it's easy, but it's basically free money if you know what you're doing. And that's why I took this short here. We have absorption into the highs, longs into the highs. We have the White House talking about the biggest bull run is starting and all that stuff I was talking about before. So we had a big capitulation event. We have this bounce back. People are going to chase this, and a retrace at least to the 0.5 here makes perfect sense, because higher time frame V shapes are very rare and usually take some time here to accumulate, to create liquidity on both ends. And as said, if it's that volatile, it can be traded very well. And you see we are technically still in a downtrend. And so with the absorption, with the news I've shown you, with everything, it's actually a very nice idea to trade the 618 here on the way down. But yeah, you do you. That's me making some money from this volatility to reallocate myself into swing plays. For example, ETH here had this level, we were talking about this level, but again, it's not that those refined levels will work 10 out of 10 times. It's a 7-day level, and I was playing it with the stop loss here, and I added, so my average is actually a bit higher, and I don't actually know why. I have to contact Bybit for that, because I can show a P&L card with an average of 1,800, and my average is now around 2K, even though I did not add anything to this position and they just changed my average. And I'm very curious why that is. So we will figure that out. But yeah, that said, I'm long here, ETH. I said be more bullish here, and I'm saying this for weeks. So the level is finally here. And you should be bullish in my view. And this is not me saying we need to like rip from here immediately. We can accumulate here for a while. Look at those candles. So if you do that, take some time. We maybe even undercut this low again. But technically speaking, we are in this higher time frame demand here. Like this big accumulation, we retested it again. Plus we are in discount of this huge range right now. So if you see this whole thing as a range, we are in very nice discounts. And yeah, so I'm long ETH. As said, it's my biggest position right now. And I'm also long ADA here, all on perps. Why am I doing this on perps? First of all, because I know what I'm doing. So if you don't have any idea of how to use leverage products, it's best to go for spot. But I do this because I can open the position at low leverage, in this case 3x, which is not that low, but it's low compared to what you can do in crypto. And once the position is in solid profits, I move my stop loss to break even, I remove the margin, I have more control over the position, my risk is way better defined, because the main problem people have with spot, what I've seen is, they think spot is way safer, which it is if you don't have the experience, but people tend to not invalidate their ideas properly, because then the coins are in a wallet or something, and then you're like, but is it really invalidated? I just wait a little longer and it drops another 20%, and you pay way more than you expected. So for many people, spot might also be risky, but if you don't understand leverage products, do not do this. Read all my posts, watch all my videos. I'm explaining this very, very detailed. It's actually, leverage is a tool for risk management if you know what you're doing. I took a stop loss because I was long here, and I took a stop loss on this big capitulation event. And this is not that bad. Why? Because first of all, my risk was very well defined, and I knew that it could undercut the low easily and wipe me out. So my risk was defined, my leverage was low, and I was willing to take 1 or 2 shots for this, maybe even 3, because if I don't go full size on the first attempt, so for example, let's imagine I want to risk like 5% overall on all my crypto positions in a moment like this. I paid stop losses on BTC like 0.75%, and I paid this stop loss 0.75%. So overall, I risked like 1.5% on those 2 positions. And I said, on a moment like this, I want to build up to 5% in risk, and paying 1.5% still makes me able to like risk 3.5%. And it's still then a huge position. So I was willing to get stopped once to have the leverage, to have my risk defined, to have the control of the position, to be able to remove my margin after, and all of those things. So yeah, This is how I do it. If you know what you're doing, as said, leverage is beautiful for managing risk and for more control over your positions. And as said, I'm in this position now. I'm in ETH right now. I need to figure out why my average is moving. And here on Tether, I've marked this as the big range, and I've told you this before. There's a weekly breaker block. There is technically another one. There's the supply. And if you don't know what you're doing, you shouldn't play your setups like this, especially on those higher time frame moments. Things overshoot. It's an emotional market. People get liquidated. People get fearful. Huge liquidation cascades make it less predictable. So if you play your setups like this, first of all, it's a tight setup for a higher time frame setup. And you need to be able to stomach stop losses. So for example, the thing I'm doing with ADA, if it makes you revenge trade, if it makes you fearful, if it makes you do stupid things, it's not the way you should trade. So you should scale in around this area. Why? Because this is how higher time frame movements happen. So people think there is this perfect refinement where you can find like the super refined entries every single time. That's not the case. This weekly breaker block, it could have worked. It reacted actually, and you could have removed the risk, but that's not how people trade usually, and that's not how people can handle that. And if you look at all those higher time frame reversals, they were never perfect, they were always noisy, and people that try to catch all of this on high leverage without experience, they usually got wrecked, they revenge traded, and they missed out to buy this super duper discount on those assets. So we can also look at ETH for that real quick. We had this 2-month breaker block, and I remember discussions about why it closed below and the level is invalidated and all of those things. Yeah, but it's a huge higher time frame demand. Your refined level didn't work. Congratulations. You should still build some exposure down here. And it's pretty much the same situation right now. So don't be one of those over refinement guys thinking you can predict the market 10 out of 10 times with your fancy level, because the market is changing. Look, for example, at previous cycles. Breaker blocks didn't really work at all. So it was supply, demand, premium, discount. The market is ever changing. Why? Because people learn. And so the market adapt, because it's not about that this little block here is something special. No, it's always about what racks the most amount of people, and the more people learn something, the faster the market will evolve and create something new that nobody knows and nobody sees. So don't get lost in over refinement. Long buy here in this key area, see it as area and see it as range, and especially wait for higher time frame closes. It's not, in this case, it's not about the daily close. For me, it's about the weekly close and above, like 7-day, weekly, 2-week. And what happens after? How will people react to this close? Because you know that people look for closes. There's a huge community of not very profitable traders who's also looking at closes. They say, oh yeah, there was a weekly close. It means this or that. And it means something for sure, but it never means what the majority thinks it means. And with a weekly close, for example, below this key low, many people will say the bull run is over, everything is over. And technically, yes, structure is invalidated, but we could simply just bounce from here. Because if everybody thinks the bull run is over, more people will sell, more people will get fearful. And if then there is a bounce, all those people will be caught off guard and they will start chasing it up here or here or here. Depends, we will see. And that's when we offload, that's when we look for shorts again. And it's always the same, it always repeats itself, and it's not some kind of magical block that suddenly makes a difference. No, it's about buying and selling, learn the underlying principles, learn the market mechanics, and the game will be so much easier than just trading random levels that you don't understand. So much to crypto. As said, stay patient, build some exposure, especially if you get retests, build some exposure, don't get even more bearish. The funny thing is in accumulations, people get most bearish right before the move. So people know that they should buy like on the way down. And then you have days like this and people still like, yeah, or BTC is probably the better example. I should buy, and I know this, and many people maybe do, maybe not. But then there's the accumulation, and then suddenly people get super bearish. It's super funny, because also here people are like, yeah, I buy 72K, and it never came. And then still, oh yeah, 72K comes, 72K comes. It needs to come, and all that. And people get more bearish, but not based on the chart, but based on emotions, based on their bias, because their bias get like validated. And so they look for reasons why they still have to be like right. and you will see that. It's the same here. We had this big capitulation event. I mean, people were super bearish, but people were even more bearish on this second shoulder basically, because it's more or less a high time from head and shoulders. And people get most bearish here right before the move really starts. Observe that. It's kind of interesting how accumulation works. And also there is a case to be made that this is a V-shaped reversal, but I don't really think that's the case. For that, we don't have enough major TradFi fear. And that brings me to the whole stock market. And this is something why I'm not really big right now in my long positions, because first of all, I've said it many times before, I think this range here will resolve in a bigger correction. And I mean, so far my short is playing out kind of well. I mean, we have already a 10% almost, yeah, 8% pullback on the Nasdaq. And so far we're still ranging on the SPX. But it's really like not lining up with the whole crypto thing. I'm not saying it needs to. So you could also simply just like crypto is doing something else than the stock market. But keep in mind that usually if the stock market is correcting heavily, it's not the best environment for crypto. So that's why I'm not really big on those longs right now. But it's also, it would be very stupid to not build at least some exposure in my view, especially because this short is like still up about like 15% or something for my portfolio. And if I take a risk of like 0.75 or 1%, you see it's actually not that dangerous to do that. People just have a problem with losing. That's why they don't really act. So look at, I'm gonna go for the US 100 because it looks a bit cleaner for those who are not used to gaps. And we have broken structure to the downside. I mean, we have done this before technically, so it doesn't need to resolve in even more downside, but it's a break of structure. And it's also right now, it's just a retest. It's just a support and resistance flip. If you look at this area here, this was support here and support again, and we flipped it, we broke it down, and now we retested from the lows. So this could be like just a retest and then continuation to the downside. And if there's a broader bear market or a bigger correction, let's talk like 15% or something, 15 to 20%. You see into the 0.5 here. I'm not saying it's not possible, but somehow I don't really think that's a good environment for crypto. But hey, I've been surprised before, and the market, usually the most rational thing is the thing that won't happen after all. So yeah, I'm open for a surprise. And also have a look at some other sectors here, quantum computing, because I got asked about QPT and Rigetti. So I'm not in a position anymore because I longed this here and I got stopped. And now we are in this big demand again. And it's really volatile. So volatility is like everywhere right now. So don't get scared or attracted or euphoric by those huge numbers, because in the end they mean really nothing. Because if there's a 20% bounce, it's usually because there was a 20-30% sell-off before. And same story here. It's a break of structure, more downside, so we confirm the downtrend and we retested from the lows. So it's a support and resistance flip. Don't get like attracted like a fly to light by those big green numbers. They don't mean anything. And it is demand, so yes, if there was a good time to buy, it's probably after a 50, 60, 70% correction. Not here, but technically it's a downtrend. Majors, TradFi majors do not really line up for this. We've talked about this right now. It's a retest from the lows. We broke structure. It's not the same environment that we had, for example, last year in summer. And be patient, because if this is a higher time frame reversal, it's usually not the V shape, especially not after a 70% correction. This takes some time. So I would at least wait for the trendline break, some consolidation, maybe majors, higher time frame stock market majors, US market majors line up for that. And then I would pull the trigger, because I don't need to build a position here. I would build one if my edge tells me to, not because I want. Same story for Rigetti. Those move pretty similar, even though the structure is different. We also had a 70-80% correction. So if there was a good time to buy, it's here, not up here. I longed here. I took a stop loss for this idea, longing the recent all-time high here, opposite pole, whatever you want to call it, support and resistance flip. And now we are back at this demand. The problem here is we could call all of this demand. And the question then is, where do you want to put your stop loss? And that's why I will let some structure form. It's the same as for, and you see, if we lose this, and if we go to this demand, it's again another 90% correction. And this is not a company who is really like profitable or creating some revenue or having something really to show. It's a speculative asset which is promising something for the future, but nobody really knows if this is going to happen or if they really develop something. So it's something you should trade and should approach with a trading mindset. And same story, same edge. Should we like consolidate here, get some high time frame majors lining up, stock market majors, and we get this breakout, I can still enter here. And even though it's maybe a bit higher than buying down here, but it's safer because I can put my stop loss below the low, because I say the idea is clearly invalidated should we break the low. And yeah, this is simply my edge. Also interesting here, Novo Nordisk. I've taken this long here. You remember it pumped 30%. You can see that in the Discord. And I said I TP'd already like 50% on the way up into the supply. And I did a full TP with the trendline break of structure. And yeah, we are way below my entry, down 26%, probably even hitting my stop loss here if I would have not done that. So know what you're trading. And I've said it many times before. It's a good time to buy also here. But higher time frame accumulation takes some time. If you look at charts like this, the typical pump and dump more or less, even though it's a little more sustainable than some others, but it takes sometimes even like 3 years, 2 years or something for accumulation. And higher time frame ranges do not line up. Have a higher time frame macro thesis for all of those things, not just blindly buying a chart because it's down 70%, because it could easily go down another 40-50%. Moderna got rejected heavily, absorption, I told you that, 85% TP. We are now back at the 0.5, and should we retest this range from the high, it might be time to add some gains back if you took some profits. Intelia here, I did a 25% TP down here, 50% TP up here. We broke structure. I could have TP'd fully here. I didn't, decided against it, so still have some exposure left. Crisp stopped me out, happens. If I would look to add back down here in this major higher time frame demand zone. But for that, I want to see majors lining up. And you see we have a pattern here, pump and dump more or less. And pretty much, if you look at Novo, it's somewhere in here. And you have those counter trend bounces and you can trade them. But it can also take another 1,400 days of sideways. And then it's still not ripping, you see. So just because it corrected 70-80% doesn't mean it needs to rip immediately. You can trade those ranges, those bounces, but know what you're doing. Don't lock your money into plays that do not move, because it's not just about taking stop losses or whatever, it's also opportunity cost. Because if you put like 10, 15, 20% of your money into such a play because you have such a strong conviction in the narrative or whatever, and it's doing nothing for 3 or 4 years, it's opportunity cost, because this money is not put to work and you just round trip all day long. So if you want to be a trader, that's not how you should do it. Next up, we have Toyota, investment bag of mine. It's doing incredibly well. I've said it before, Toyota, stable, blue chip company. Don't just buy crap, also buy some companies that really create revenue. Yeah, actually, I also took the meta short. So I've shared this in the Discord group. Doing well so far, based on higher time frame macro thesis, Nasdaq, SPX correcting, and so on, plus maybe head and shoulders in here, first signs of weakness, big sell-offs. So yeah, makes sense to me to be short. Here we have the nuclear sector also going ballistic after big corrections, but again, make sure you understand the context. Just because there's a huge green number doesn't mean anything. In this case, it's actually holding the demand quite well right now, but this could also be the right shoulder and it simply rolls over. So as said, based on majors, I'm cautious and defensive on all of those plays right now. This one, after the rebrand, as said, it's doing incredibly well, but it's sitting in supply here. Should we get a momentum break, I'm out of this position. For the crypto guys again, you know, I took the stop loss on Circle. which is okay. It was a defined risk. Now we are way below the price where they started listing it. Plus, we started to break this local structure here, this local momentum, and the volume is also not that bad. The only thing that I'm now waiting for is what is crypto doing over the weekend, because I think it's going to be a volatile weekend. It's going to be a volatile early next week. And also, a friend of mine told me that the ICO price was around 35 or something, and they are probably protecting this. So let's see what happens. As said, first signs are there, but it adds basically just risk to the crypto plays. So know what you're doing here as well. MicroStrategy, same story. It pumps insanely, but at the same time, I mean, yeah, it also dropped insanely. So don't get caught by those green numbers. PayPal started to scale into PayPal. I've shared this chart on X, I've shared this chart in the Discord and everywhere. I said, if we see some strength here, this might be the accumulation everybody was waiting for. Within here, there was pretty much no volume traded, and see where we reversed or where we bounced or stopped when the first high volume bars started. So this is obvious strong demand. I mean, they listed it here. We are back at this price. Could be like the same story as for Circle. We could just undercut this low, but I'm taking my chances here based on the volume, based on everything I know about PayPal. And it's against the high time frame thesis, against the high time frame macro thesis. But it's not about that I have one bias and all my trade ideas need to align with this bias. I have separate ideas, and look at this whole structure. We corrected ever since 2021. It pretty much did nothing after the bear market. It just went sideways, and we correct now even more. And so it could be acyclical, and it could be acyclical for the reason that nobody expects it. So yeah, dipping the toe in here, not huge risk for now. Yeah, okay guys, and that's it. More crypto than usual today for a Saturday, but as said, the developments are kind of crazy and we want to stay prepared. That's why I made this update today about crypto. On Monday, we will again dive deep into crypto. I think it's going to be an exciting weekend, an exciting next week. This is where you build your swing positions. This is what you need to be ready for. This is where the big money is made if you play it right. Have a great weekend. Bye.